Here is your December 2022 market update. You're definitely going to want to watch this one. The clickbait, the headlines. We know that there's a lot of noise out there when it comes to real estate. So one of the goals of this show is to give you actual data, actual facts that will tell you exactly what's going on in the real estate market so you can make a really well-informed decision if you're at that point in your life where you're considering a buy, a sell, or both. So let me break down everything that happened through the end of December, and then we'll talk about what it means for aspiring buyers, aspiring sellers, and folks that are starting to kick around the idea of making a move in 2023. So the number of sales, they were down in the entire region, and the sample size here is Philadelphia, Chester County, Delaware County, and Montgomery County. We saw a decrease between 13.2 and 15.3% in Philly, Delco, Montco, and Chester County saw an even more significant decline in number of sales at 22.7% less homes sold in 2022 than 2021. So less homes are selling. We knew that. Prices, on the other hand, continued to rise. So what we saw in the suburban counties was an 8.6 to 10.3% increase in the median sale price in the suburban counties, and Philadelphia saw a 1.9% increase in the median sale price from December 21 to December 22. And that's the whole year. That's the whole 12 months. It's year to date through the month of December is what we're talking about here. So prices are continuing to go up despite threats and rumors and predictions of a market crash or values declining. Days on market ranged from 19 to 20 in Chester, Delaware, Montgomery County through the end of the year, and was 38 in Philadelphia. However, in the month of December, we saw that number spike up a little bit, showing signs that the market is moving. We saw a 24 to 26 days on market range in Chester, Delaware, Montgomery counties for the month of December, and 47 days in Philadelphia. So that's obviously an increase. It's taking longer for properties to sell than it did throughout the entire year for the month of December. And that's definitely being felt in the marketplace right now. Rates, we know rates have moved. High fives, low sixes. We got a 5 handle. That's very exciting. We'll talk about how that's going to affect affordability in a second, because rates were as high as 7 and as low as 3 last year. Pretty incredible the changes we saw in interest rates in 2022. Additionally, inventory levels. This is one of the biggest concerns for folks. Philadelphia has a very high inventory level of homes available to purchase. 4.74 months supply. That means that if nothing else came on the market, that's how long it would take for all the inventory to sell. 4 months and 3 weeks roughly. In the suburban counties, we saw a range of a 1.52 to 1.77 month supply for the month of December. This is a big increase. Most of the year, we were talking about less than a month's supply of homes. So for the folks that are saying there's no inventory out there, and this is a lot of buyers, there is a significant increase in inventory that we saw through the end of 2022. And lastly, what are sellers getting for their properties? What are homes selling for relative to the asking price and the final sale price? So throughout the year, we saw a 100.8 to 102.2% average in the suburban counties. So over asking price was the norm. However, in the month of December, we saw that drop to a 97.9 to 98.6% of the asking price. So homes aren't selling above the asking price on average anymore. Very important for buyers and sellers to be aware of. For sellers when you're pricing your home, and for buyers when you're making an offer. In Philadelphia, it was as high as 97.8 and dropped closer to 93% in the month of December. So that's a lot of data. It's a lot of stats. I get it. I'm going fast. I'm throwing a lot at you. Here's what my takeaways are from this. If you're a seller, look at the percentage of the asking price being received. You don't want to play the game of, I'm going to price it low and expect a bidding war. If I'm a seller, I'm pricing it right where I think it's going to sell for and being very mindful of breaks in the marketplace. Homes sell up to 400, 425, 450, etc. I'd be very mindful of positioning your home properly. And that's going to vary from school district to school district, township to township, neighborhood to neighborhood. So it's really important you get someone who can articulate this local data for you and show you the stats in a way that's easy to understand. If they can't explain it, how are you going to understand it to make the best decision for pricing your home? Additionally, if I'm sellers, I'm looking at inventory coming up. sure, we still have a very seller-friendly market, and we're in the very beginning of the year in the first quarter. Historically, we're going to see more homes hit the market. So I'm throwing my spring market dreams out the window and getting my home on the market now because we've seen rates come down, which has bumped up buyer affordability. We've seen inventory start to increase, and we're still seeing a very solid price trajectory. So all those things tell me I want to list when there's not a lot of homes on the market, not when there potentially could be more competition, which historically happens in the spring marketplace. I want to be the only option in town because demand is there, and we're seeing that. For buyers, rates have come down a little bit. They were as high as 7% in the fourth quarter in October. So affordability is better than it was. That's good news for you because you buy your home with the monthly payment. Secondly, inventory starting to come up. I'd be scouring the market. I wouldn't be giving up or saying I'm going to save more money or wait, because given the price trajectory that we're seeing and what I anticipate, which is probably a 3 to 5% price year-over-year appreciation in our marketplace on the median and the average, prices aren't going to be going down. So whatever you save, it's still going to cost you more later. And the Fed looks like they're going to be continuing to raise rates here for the next couple months. There's a 98+% chance at the next meeting, which is this week, coming up here. I'd be very mindful that that 25 basis point increase, which is likely, is already baked into mortgage rates. If they continue this, and a lot of experts are telling them to stop, that rates could go higher and the cost of money could go up again despite everything going on in the economy. So we don't know what the Fed's going to do. We know where mortgage rates are coming in right now. And obviously, if you're renting, you're paying someone else's mortgage. So I wouldn't be waiting until the spring. I would be waiting for the right property to come up, or at least a property that hits 70% of the boxes that I'm looking for. I would look at it that way and be constantly looking, not coming in and out of the market, because the best homes always sell quickly. And if you can get a lower rate and get a payment you're comfortable with, which is what really matters, that's what you want to focus on. So the message is this for buyers and sellers. The market's changing. Know your numbers. Find an agent who can articulate all this to you. And most importantly, don't pull out of the market and don't take your foot off the gas with your decisions, because the market could change pretty rapidly like we saw last year. And right now we're seeing favorable things for both sides.